Good morning, traders. Today we want to discuss day and swing trading tips for trading dollar, Swiss franc, and FS. Day and swing trading tips for trading dollar, Swiss franc, and FS. We have a monthly chart of the dollar Swiss franc currency pair. And as you can see, the price breaks above this bearish trend line. So by connecting this high to this lower high, we can draw this bearish trend line. I'm going to color it now in green. All right. You see this trend line here is a bearish trend line. The price breaks above that trend line. But before you start thinking to buy at the retest point here, how few things I want to explain to traders. You can see that the price came down. In 3 moves from here, you can see it went down. All right. And then went up a bit. And then it came back down. So this is what we say, minimum price move is free. Price came down in 3 moves. Possible reversal point, the price changes direction here, and you can see from there onward the price start going up. All right, and it finally goes above this bearish trend line. But very often what we usually see, you see a financial instrument will be trending up, and then it may come back down 1, 2, 3. And then it start going up like this. Okay, start going up like this. All right. But very often what we have noticed, more than 70% of the time, when the financial instruments start going up from here, we will prefer it. The price usually will try to come back down to retest this low here before going up. So as you can see, there was a price was going up before, and then came down 1, 2, 3, and then from there onward it start going up. All right. We will prefer it, okay, to pull back again to retest this low here. All right. But there are key levels that we must pay attention to. The first key level is the 61.8% Fibonacci retracement level of the price action. Price action from here. See, going up, going up, going up, all the way here to this point here. So price start going up from here all the way up here. The best place to buy is this low here. All right, 1 second, please. Is this low here at a 70.64? So price went up, okay, and then 1, 2, 3 down, and then start going up, which is this section here going up. We will prefer it to pull back to the zone of 70.64. But sometimes the price may not come down all the way to this low here. It may stop at 61.8%. That's why some traders did here. You can see how the price start going up, going up, going up. And then they force it down to the 61.8% Fibonacci retracement level. Apart from that level, we can also, the price sometime may come down all the way to the 88.6%, 88.6% Fibonacci retracement level of the price action from here all the way up here. All right. So the takeaway is this. So financial instrument was trending, and it came back down 1, 2, 3, forming a low here. This low is very important for us. That's the low I'm talking about here. We need to use down, it start going up to this point. All right. See here, it's like going down, start coming down. We will use a Fibonacci retracement for this session here, and we will highlight the 61.8% and the 88% Fibonacci retracement of the price action from here to here. So the price action from here to here, in this case, talking about the US dollar Swiss franc currency pair, is from here all the way up here or all the way here. All right. Now that it starts coming down, we are paying attention to 61.8%. So if you were here and the price touching the 61.8%, after going up, pulling back, we are watching the 61.8%. Very important key level for this trading setup. All right. Well, 61.8%, best place to look for opportunity to buy. All right. So if you are here, you will implement a top-down trading method because this is a bullish trading setup. Price goes up, price came back down 1, 2, 3, and start going now from A to B. If you start pulling back, we are watching the 61.8% and the 88% Fibonacci retracement level. One can also watch the 78% Fibonacci 8% Fibonacci retracement level, but in most cases, the price may change direction at 61.8% or 88% Fibonacci retracement level. All right, 88% Fibonacci retracement level at 74.78. So the 61.8% is 82.88 price level for the dollar Swiss franc currency pair. All right. The 88% Fibonacci retracement level, I do not use 88.6%, I use exactly 88%. All right, so 88% Fibonacci retracement level is at 74.78. So you can see here the professional who understand what I'm talking about here forces the price down all the way. So some trader were buying here at 50%. That's okay. If it works, it works. If you use a top-down trading method, it works. But you can see as the price was going up, they correct it. They correct this. Okay, they don't want it to stop here. They want it to go to 61.8%. Boom. Here. That's what we see very often. 70% of the time, they probably do exactly that. If it fails to find a support here, it may go all the way to 88% Fibonacci retracement level. So talking about day and swing trading tips for trading the dollar, the US dollar, Swiss franc, and FS. We have this pattern here. Price went up. Now price came back down. 1, 2, 3. Now it's going up. We are in this session now. All this move up all the way here. You can see that they force it down. This is a distortion. I don't like this one here. The reason why the price came down very fast, I don't like it. It's a distortion to a certain degree. After the distortion, the market corrected that distortion. That's why it quickly bounced up to correct the distortion. So in my view, for the US dollar Swiss franc currency pair, in normal condition, the price may try again to retest either the 61.8% Fibonacci retracement level or the 88% Fibonacci retracement level, or will come back down to retest the 100% Fibonacci retracement level. The 100% is at this point here at 70.64. So 100% retracement, 70.64, note it down. 88% retracement, Fibonacci retracement is at 74.78 price level. Okay, and the 61.8% Fibonacci retracement level is at 82.88. All right. So if you are day trading or swing trading the US dollar Swiss franc currency pair, those are the key levels that you must pay attention to. As I explained to you before, the price structure will determine the strategy that we must deploy. Here we have a specific price structure. Price went up, okay, and then pull back 1, 2, 3. Now it's going up. Professional watching 61.8%, 88% Fibonacci retracement level, and 100% Fibonacci retracement level. As you can see here, they force it down to the 61.8% level. In my view, this is a distortion which was corrected quickly. The price bounced up to cancel the distortion. Now the price tried going down. there is a high chance that this currency pair may continue to go down. Now we have a bearish trend line here. I'm on the weekly chart. Okay, so you see, George, today you're on the weekly chart. Good. All right, okay. I'm on the weekly chart now. You see, start going down. Okay, people are selling on the edge of this blue trend line here. So this is the last week. They sold it on the edge. Boom, down. But be careful. All right. So you want to sell it on the edge like a pro. I explained to you in other video, if you are following us at Day Pro Traders, if you are following us at 2-4 stock, what's the time now? Okay, okay, it's lunch time in London. All right, okay. So yesterday I was talking about how one can sell, break below, retest, turn around. So break below normal horizontal key level, retest, turn around, or break below, okay, a trend line, okay, retest, turn around. So people are selling here. Now we have a small triangle developing here. If it breaks below this level here, which level is that? If it breaks below the level of 9513, where is it going? Well, how do we set the target? With the triangle, we measure the height of this triangle, and we project it down at the breakout point. So there is a target here at 88.36 that the professional are watching. If we break below this level here, the horizontal line here, break below, retest, we use a top-down trading method to trade it without ignoring the economy news and the fundamentals. If you do not want to check the economy news, do not trade Forex. Check the economy news at forexfactory.com. All right, break below, retest, and then coming down. The ultimate bearish target is at 88.36. Midpoint target in the zone of 91.93. All right, if it's going down. If it breaks above, okay, there is a bigger triangle here. Can you see a bigger triangle here? All right. If I extend this line, so I use a smaller triangle before for my conservative, okay, bearish target. At this point in time, if it break below this level, the trend line here, break above, retest, turn around. Well, we use a top-down trading method to buy it. Minimum target in the zone of 106.00. Extreme target at a breakout point using the size, the height of the bigger triangle. On the weekly chart, we project it up somewhere here. Call it a 108.00. All right. But in my view, looking at the price structure, if we go again on the monthly chart, this is the price structure. Price went up 1, 2, 3. Now it's going up all the way here. Professional watching 61.8% Fibonacci retracement level, 88% Fibonacci retracement level, and 100% Fibonacci retracement level. It makes sense? All right. This is a price structure that will determine the appropriate trading strategy that we must deploy. So now I'm showing you the price structure that is in place. Price went up, pulled by 1, 2, 3. In this session up, usually the price does not go up straight, going up all the way up here. In most cases, you will stop somewhere and then start coming down. We are watching 61.8% Fibonacci retracement level, 88% Fibonacci retracement level, and 100% level. The price can change direction at any other key level, but in most cases, it may stop at 61.8% level, which it did already here, but this was a distortion. All right. In most cases, it may also change direction at 88% level, or 100% come back all the way here to form a double bottom chart pattern. We are not assuming anything. We are waiting for a pattern to be in place. So when it reaches this level as it did here, because I'm on the monthly chart, so you probably will switch to the daily chart. As it's touching this level, you'll see on the daily chart, boom, a bearish candlestick stopping there. And then the following day on your daily chart, you implement a top-down trading method if you see the first bullish candlestick bar. All right, this is about day and swing trading tips for trading dollar, Swiss franc, NFS. Now, what I'm doing here, for some traders, it may not be useful for them because the type of video that I'm putting on YouTube is for traders that want to learn to trade like a pro. So, in order to trade like a pro, all right, remember this, I will say this again, we are looking for a valid trading setup. So, we are talking about the price structure, okay? When we see a trading setup, we implement a top-down trading method. I also mentioned to traders that when we apply a top-down trading method, it's not finished because it's all about technical analysis. But we must use something else that we call the triangle. The market first, the sector, before the individual financial instrument, the heart of the trading triangle, the market leaders, the economy news, and the fundamental. For forex traders, we are talking about top-down trading method without ignoring the economy news that can change the dynamics, okay, of the technical analysis. Unless you are just playing the market, so using forex as or FS as a game, that's a different matter, all right? But if you want to learn to trade forex like a pro, those are the things that we are looking for. The price structure, as I show you here, we have a price structure in place. That price structure will allow us to implement, okay, the best day or swing trading strategy that will generate, okay, real profit. All right? And the trading drill is very simple. Trading setup, implement a top-down trading method without ignoring the economy news. If the signal fail, come out. All right, it makes sense. So if you have any question or suggestion, put in the comment section, and in due course, I will be recording another video to answer your specific question. But before I close this video, I would like to talk about the short-term equilibrium price level for the dollar Swiss franc. The short-term equilibrium price level for the dollar Swiss franc is at 9723. That level will remain in place for the next, okay, 2 weeks or so. So maximum 3 weeks. Day traders, swing traders must watch the orange line here, looking for opportunity, okay, trading setup around 9723. That's the short-term equilibrium price level for the dollar Swiss franc currency pair. All right, so the price breaks above the green trend line. People may say, George, why usually taking people will be expecting the dollar Swiss franc to pull back to retest the green line. If it's retesting it and you want to buy on the edge, be careful, be gentle, all right? Use a top-down trading method and take it one step at a time. All right, so there is also a triangle here. If it's testing it, come up, boom, down. Ultimate target 88.36, a little bit below the green trend line. But remember, professional watching 61.8. They pull it here. Is it finished? Well, if they consider this as that's it is done, well, then the only way is up for this currency pair, because if the parties already, I don't think this is done yet, because it's a distortion. Probably they would like to bring it back in another manner to retest this level again. We will see. We go one step at a time, okay, trading like a pro. All right. We are the GSTW24 traders talking about day and swing trading tips for trading dollar Swiss franc like a pro. Happy trading to you all and speak to you soon.